Bitcoin treasury companies are not a fad. They're not a phase or a speculative trade. They are a signal pointing to a seismic shift in capital markets that most people haven't come to terms with yet. Because in 2025, the most profitable thing that a company can do isn't launching a new product, it's buying more Bitcoin. And that's not just some marketing line, it's provable with data. Bitcoin has become the new hurdle rate, which is the baseline that every other allocation has to beat. For years, individual investors and particularly Bitcoin advocates have known this. If you're holding a diversified portfolio and it's underperforming Bitcoin on a 3, 5, or 10-year window, you're effectively bleeding opportunity cost. And every dollar not in Bitcoin is a dollar exposed to decay through inflation, yield compression, and generally just mispricing assets. And now companies are waking up to that same reality. Let's walk through why. Because it's not just that Bitcoin is up a lot, it's how Bitcoin fits into the world we're living in. In a fiat world, which is the one we're living in, reinvesting profits into growing your business can work so long as the currency is being devalued fast enough to mask falling returns. But in a hard money world, now that Bitcoin exists, goods and services are becoming more abundant. Because of technological innovation, we are getting deflation, but that's butting up against perpetual monetary debasement, endless money printing. And so the returns from expanding production or launching new services don't compound the way that they used to. That's also butting up against the fact that consumers have hit a wall in terms of buying new things. Essentially, everybody has works. They don't need to upgrade or buy something new, whether it's a dishwasher or a smartphone. That's why companies have come out with planned obsolescence over the last couple of decades to make it so that you're forced to buy something new. And so now that we've hit this wall, now that your return on investment or reinvestment falls below the return on holding Bitcoin, guess what? You've just found yourself a new capital allocation strategy. You stop building and you start buying Bitcoin. So what we're seeing with these Bitcoin treasury companies isn't a bubble. It's not some collective mania. It's a repricing of capital around reality. Let's take a look at the numbers. These are valuations based not on earnings, but on Bitcoin per share. They reflect how the market values access to Bitcoin held on the balance sheet. And that's where the comparison to traditional markets becomes laughable. Let's look at three giants. So Nvidia's PE is 50, Amazon's PE is 30, and Tesla's PE is 117. What that means is if you buy a share of Tesla today, its price is 117 times its earnings. These aren't startups, they're mature companies with global footprints, and yet they're trading at absurd multiples, built entirely on faith that their future earnings will grow exponentially in a low-growth world. Now compare that to MicroStrategy. Only 57.7% of its market cap is accounted for by Bitcoin holdings. In Metaplanet's case, only 21.44% of its market cap is in Bitcoin. So if we're going to scrutinize Bitcoin treasury companies for being overvalued while we give a free pass to tech companies trading at triple-digit PE ratios, you can see exactly where the hypocrisy in TradFi comes from and where the hysteria around Bitcoin treasury companies comes from. The truth is Bitcoin treasury companies aren't just more fairly valued than most large cap stocks, they're arguably undervalued because they have shifted the goalpost. They're not optimizing for quarterly earnings, they're optimizing for long-term Bitcoin allocation because Bitcoin is the hurdle rate. And that makes mNAV, market value over net asset value, a far more honest metric than PE. PE ratios reflect future promises in a decaying system, whereas mNAV reflects current access to the hardest money on earth. Bitcoin is the benchmark now. It's the risk-free rate for capital markets in a fiat world. So if you're an executive sitting on a bloated balance sheet, if you're a board member staring down declining ROI across every division, and if you're a homeowner with idle equity doing nothing for you, you've got to ask yourself one question. Can this capital beat Bitcoin? Because if it can't, there's your answer. You're better off holding the benchmark. And that's exactly what more companies and more households are starting to do. We're entering a phase of capital repricing. The world is waking up to the reality that the dollar isn't the measuring stick anymore, Bitcoin is. And in this new world, capital is flowing to wherever it's treated best. If your home equity, your income, or your company's treasury is sitting still, it's falling behind. Thank you so much for watching today's video. I really appreciate it. And of course, if you want, please make sure to like and repost so more people can see this. And of course, follow for more. And if you don't want to fall behind, that's where Horizon comes in. Horizon lets you turn home equity into Bitcoin without new debt, monthly payments, or interest. Just a smarter way to get off zero or go further down the rabbit hole. In a world where Bitcoin is the benchmark, Horizon helps you move faster. Visit joinhorizon.com to see how much Bitcoin your home can get you before the next repricing wave hits, or just scan the QR code right there. That's all for today's video. Thank you so much for watching. I'll talk to you soon.